important factors that we have talked about. One is the rate of inflation, which is explained by the uh, purchasing power parity theory, and the other one is the interest rate parity theory, which seeks to explain the behavior or the influence of interest rates on the foreign exchange rates. And then we did have a look at a lot of the kind of trade that takes place in the foreign exchange market, like the arbitrage, the speculation, hedging, and investments. And it is around these different modes of trades the entire curriculum was designed. We have discussed some of the instruments or derivatives, like the forward markets, the forwards, the currency forwards, uh, the currency futures, the currency options. What are their salient features? How they are different from each other, and how they are traded? What are the common strategies that can be formed by you know using these instruments, and how they are useful in uh, for the purpose of hedging as well as speculation. So I hope these things, whatever we have discussed so far, are clear to you. Yes, yes, Aisha, you have been very regular in my class. Thanks for that. So, subsequent to that, we also discussed the concept of the exposure, the currency exposure. There's another topic, that is interest rate exposure, which I have not touched upon, but I have given you shared the links of some videos on interest rate exposure. We have discussed the currency swaps. That is a really very, very interesting thing. And if time permits, once your semester is over, and God willing, if you are all joining us for the last semester, for maybe I'll hold some sessions and we'll discuss some of these techniques, that how the market imperfections can be gainfully utilized to generate profits for uh, the the parties which are involved in business, how you can source different currencies in the international markets, and utilize upon the quality spread differential that is available there. And then subsequent to that, we discussed about the international working capital management, how what are the different techniques which are available, how you can make use of these techniques in order to release funds for your organization in order to meet the day-to-day requirements, as as a precautionary motive, as for the short-term investments or speculation as well, right? We discussed about the political risk, and discussed some examples about expropriation, and some of the approaches which are followed in dealing with the political risk. And finally, we did talk about the international project appraisal, and how we discussed about uh, an important technique which is called as an adjusted present value technique, although very, very, in a very, very cursory way, in a very desultory way, we discussed that. And we also discussed the concept of the growth options of a project, right? Instead of looking at a project as having a static approach, we should consider the projects as dynamic entities. So these are the things which we have discussed. And what we have realized, that international financial management, as the students of international financial management, once we are through, uh, let me ask you, Aisha, what is your, kind of outlook? What you have gained, what you have learned, what is the take away from this course? Okay, okay, good. What else? Anybody else? Afra?
Yes, basically in the beginning we learned about the currency swaps and
Okay,
different how the currency was the history of the currency, um,
okay,
which was a new topic. And
okay. Anything else? Adil, would you would like to add?
Yes, sir. No, sir. It's all right.
uh, it's okay. Uh, so basically, the most important financial management is that in order to assess any business situation, especially when we are going abroad, and is that we need to analyze not only the financial aspect of the proposal, but also the political risk that is also very, very important. Sometimes the financial figures, you know, the financial figures may be very, very lucrative, and they would be, kind of very, very inviting to go ahead with the project. But if you look at the risk reports, if you look at the political or the country risk, then the risk is at times prohibitively high. So you have to, consider both the things. And that's a very, very important learning of international financial management. Another important thing is that while discussing the operating exposure or the economic exposure, we came across some examples which have shown that even if you are 100% domestic or a local organization, you cannot say that we are completely insulated. We are completely, we are kind of risk proof. The exchange rates, if they move in a negative way for you, so there is a possibility that despite the fact that you are operating purely at home, you may lose on your clientele. And this has happened actually. This has happened uh, in many a times, that people have, if their home currency has become stronger, so instead of going for the local or the domestic tourism, they moved over to, they switched over to going abroad. They preferred going abroad. With the same amount of money, they were trying to avail the tourist facilities of other countries. And perhaps that is the reason why we have a very, very promising sector that is called as a healthcare tourism, wherein people from developed countries, you know they go to the less developed countries for their treatments, which are not covered by the healthcare insurance. So with the same amount of money, in fact, in many cases it has been found, it has been empirically proved that even at one-fifth of the cost, you know you are able to avail the best facilities, and you may end up saving a lot of money. And with the same kind of expertise and same kind of international standards. And that is the reason why Indian healthcare, especially the corporate healthcare, is very, very uh, you know It is, India appears to be in some of the top countries as a destination for healthcare tourism, right? Because of the presence of the world-class healthcare, some of the best trained doctors with the best techniques and the technical support. India is like a very important destination for healthcare tourism, uh, and that's why you have the international wings for most of these hospitals like Max Healthcare or Fortis or Apollo and Artemis and Medanta, and just to name a few. So it's important that we, even if we are a purely domestic organization, we should realize and be on a watch. We should be on a watch out for any adverse changes in the exchange rates, which might, adversely hit our business. Uh, Another very important thing which we must keep in mind that while investing in the international, uh, say, bonds or in international equities in American depositories receipts ADRs or the global depository receipts GDRs, uh, it is important that we not only look at the rate of return or the return that is promised, the interest that is promised on the bonds, but also we should remember that in which currencies we are, investing. Because if the currency in which we are investing, if it becomes stronger vis-a-vis our home currency, then obviously our returns will increase, right? Say, for example, today if I invest in US dollar and the exchange rate between Indian rupee and US dollar is that 1 US dollar is equal to say 72 rupees, right? So, and if I put some money in some say in some bonds and say after 1 year I'm likely to get 1,000 US dollars. So when I get those 1,000 US dollars, and by that time, if the exchange rate moves to say $1 is equal to 73 rupees, so I will be getting, you know, in home currency terms, I'll be getting 73,000 Indian rupees instead of the 72,000 Indian rupees, which was based on the spot rate, right? So that is important thing. And another very important uh, thing that needs to be borne in mind, and that is when we are forecasting the different currencies based on the different models, based on different um, say theories. Uh, so there are two important concepts. Uh, One is the accuracy, right? Uh, can anybody just let me know what is when I say the word accuracy? If there's an accurate forecast, what does it mean? Yes. What? Very good. Very less deviation from the actual or from the real, figures. That means you are very close. Your forecast is very close to the real figures. So that is what we talk about accuracy. Another important thing is, especially in the when we are predicting the currencies, is the direction of forecast. Can you make a guess? Now, when we talk about the direction, it basically refers to whether is currency a particular currency is going to appreciate or depreciate. Now that is very important. You may be very, a forecasting model or a forecasting technique may generate a very accurate figure, a very accurate number, that this currency will change by say 0.5%. But if it is giving the wrong direction, now the direction can be plus or minus, if it is going to appreciate by 5% or whether it is going to depreciate by 5%, it is going to make all the difference, especially when you are into the business of speculation, when you are into the business of buying and selling a currency. So based on whether a currency is likely to depreciate, so if you are expecting a currency to depreciate, so you will sell it now when it is priced high, and later on you will try to buy it, right? So that would be the thing. But if the forecast is wrong, it is not giving you the right direction, so your trade would be wrong. You will end up making losses. So that is the basically the concept of accuracy and correctness. Now, one last thing before we wind up is, let me ask you if you have any queries, any questions related to international financial management. You can ask me now. Tomorrow, you have your test. It is going to be a very simple test. Uh, your class timings are at 12:55 p.m. So at 1 p.m. I will share the link of the Google Docs, and uh, after 20 minutes, the link will stop accepting the responses, right? So this is just a 15 minutes test. 5 additional minutes would be given for if there are any problems. And so you have 10 questions based on the monetary system, based on the different theories, and some of the strategies on futures and options and all. So I wish you all the luck. It will it will be something very simple. Nothing, you won't need any calculator actually. Nothing of that sort. Okay.
Okay, sir.
No. Yes, all multiple choice questions. Okay. So thank you all for joining, and inshallah we'll meet tomorrow. Even once the classes are over, you can this group is open. You can ask me questions. If you have anything, you can call me, and I'll be more than happy to handle your queries. And once you have submitted all the assignments, I will display the marks out of 70. In case any discrepancy, we can discuss it. Okay. Thank you so much.
Thank you, sir.
Thank you, sir.